So consider this staggering statistic for a second. Between 60 and 90% of new Bitcoin users actually abandon it before they even complete their first transaction.
I mean, it's wild when you actually think about it.
Right. And it gets worse because the drop-off just accelerates from there. Up to 95% of wallets become completely inactive within 6 months.
Yeah, it is literally a textbook structural retention failure. You see this massive headline-grabbing influx of curiosity whenever the market moves.
Yeah, everybody starts talking about it at Thanksgiving.
Exactly. But the persistent active user base, like the people who actually build their lives or businesses around it, is just a paper-thin layer.
Well, welcome to this deep dive. Today we are not looking at price charts, or ETF inflows or layer 2 scaling debates.
Thank goodness for that.
Right. Instead, we are exploring a really profound, deeply philosophical critique of Bitcoin's current state. We're diving into a collection of essays titled Why People Quietly Leave Bitcoin, alongside this proposed constitutional document called the Genesis Act.
Both written by someone using the pseudonym Ugly Old Goat.
Yes, who also cheekily refers to himself as a totally depraved boomer and an opportune moron, which I love.
It definitely sets a tone.
So our mission today is to figure out why users are just quietly walking away, the unseen dangers of what the author calls governance drift, and this radical proposal to write Bitcoin's purpose into permanent human-readable prose.
And I think what makes this body of work so compelling is that it completely shifts the analytical lens. Like, this isn't a critique of the technology at all.
Right. The code works.
Exactly. The cryptography is sound. Blocks are mined every 10 minutes. The ledger is immutable. The author's critique is focused entirely on the network's meaning. The central thesis we're unpacking today is that the ecosystem has masterfully engineered code, but it has completely failed to engineer consent.
So let's look closely at this quiet exodus first. The data in the sources reveals that users aren't leaving loudly. We aren't talking about rage quitting because a transaction failed or some massive chain reorganization happened.
Right, they just kind of drift away.
Yeah. The analytics show only 5 to 10% of new entrants become repeat participants within a 30-day window.
And to explain that hemorrhaging, the author divides the ecosystem into two distinct psychological camps. On one side, you have the conviction holders.
Okay, and who are they?
These are participants who possess a strong anchoring framework. They can weather the insane volatility, the toxic tribalism on social media.
Oh, the Twitter fights?
Yeah, the endless technical debates. They survive all of it because they have internalized a deeply rooted belief about what the system fundamentally is. But the vast majority of people walking through the door are what he calls unanchored users.
Okay, but let's unpack this for a second. Couldn't someone just argue that, well, that's just crypto?
Right, the classic defense.
I mean, the entire industry is highly speculative, extremely volatile, and let's be honest, often really extractive. So isn't it completely natural that unanchored users bail the second the price dumps or the novelty wears off?
Well, that is the standard defense mechanism of the community. But the author directly calls out that this is crypto mindset as just a psychological shield.
A shield for what, though?
A shield used to avoid a much more uncomfortable truth. I mean, people aren't capitulating just because of market dynamics. They're leaving because they never actually found something they could clearly define.
Oh, that makes sense.
Yeah, if a user cannot articulate what Bitcoin is, they just have nothing to anchor their belief to when the inevitable turbulence hits.
Think about your own hardware wallet for a second, if you have one. If someone asked you to define the absolute, unchangeable boundaries of the network securing it, could you?
Most people definitely couldn't.
Or would you just have to guess based on whatever the prevailing narrative is online this week? Like, if you can't explain it simply to your family, or you can't justify using it to a merchant without borrowing all this dense jargon, you can't really build a durable financial life around it.
Exactly. You might gamble on it, but you don't actually adopt it. And that exposes the ecosystem's illusion of adoption. I mean, the metrics constantly touted by the industry are, hash rate, institutional custody, market cap.
The big numbers.
Right. But the author argues those metrics are fundamentally flawed because they fail entirely to measure the retention of belief. Capital can visit a network temporarily just to harvest yield or ride a momentum wave, but only conviction stays for the long haul.
Okay, so If we accept that people are bleeding out of the network because they can't define what they are actually participating in, we really have to look at the root cause. Why is this network so incredibly difficult to define?
Well, the author attributes this to a phenomenon called governance drift.
Governance drift,
Yep.
okay, which moves the critique from like the psychological realm into the structural reality of the network.
Yeah. Bitcoin possesses this incredibly robust technical layer. There are node operators, massive mining operations, open source developers. But what it completely lacks is a clearly articulated, universally accepted constitutional answer to the question, what is Bitcoin?
Now, I know the immediate reflex here is just point to the Bitcoin white paper.
Oh, absolutely. Everyone does that.
But the author preempts that argument. The white paper is a brilliant architectural document, but it is not a constitution.
Right. It describes how a peer-to-peer electronic cash system functions mathematically.
Exactly, but function is not purpose. The white paper never draws final impassable boundaries around what the network is ultimately for, or, more importantly, what it must never be allowed to become.
And without those defined boundaries, every single debate over a technical upgrade just mutates into an existential crisis. I mean, if the foundational rules aren't codified in human terms, then legitimacy just becomes a negotiable commodity.
And if legitimacy is negotiable, nothing is ever truly settled.
Exactly. That is governance drift. It is this slow, silent mutation of the system's meaning, driven by these hyper-technical debates that are actually just masking unresolved philosophical disagreements.
It's kind of like playing a massive high-stakes board game
Yeah.
where the rulebook does a phenomenal job explaining the physics of how the pieces move.
Yeah.
But no one ever actually bothered to write down how you win the game.
Oh, that's a great way to put it.
So every time some weird edge case occurs, the players just argue it out based on vibes and whoever shouts the loudest.
And the consequences of playing without a victory condition became glaringly obvious in October 2025. The author points to this specific moment not as an attack, but as a crucial revelation.
So let's look at the mechanics of what actually happened there. We're talking about an unintentional shift in default settings by the Bitcoin core developers.
Right. Totally unintentional.
But how does a simple software update trigger an actual constitutional crisis?
Well, it really comes down to how technical changes propagate through a decentralized network. The developers rolled out an update that altered default mempool policies.
Okay, so tweaking the rules for how unconfirmed transactions are relayed and prioritized by nodes.
Exactly. And because the vast majority of node operators, I mean, let's be honest, they don't manually review every single line of code or custom configure their settings.
Right, they just download the update and run it.
Yeah, so the new defaults just became the network standard through pure inertia.
And the text has a really striking framing for this. It says, failure is not betrayal. Failure is revelation.
It's such a powerful line.
Right. The developers weren't acting maliciously at all. They actually did the network a massive service by exposing a fatal structural flaw. They proved that a fundamental behavioral change could propagate globally without any explicit, informed consent from the users.
It completely demonstrated that the user base possesses no formal mechanism for ratification. I mean, the system was drifting simply because nature abhors a vacuum. When constitutional meaning is unclear, operational power just fills the gap.
The developers write interpretations into code, nodes blindly enforce those defaults, miners comply with whatever's the most profitable template.
And users just go along with it.
Until the confusion mounts and they quietly exit.
Exactly.
Because the system lacks a defined boundary, it leaves this massive power vacuum. And what happens when there's a vacuum in a decentralized network, the market steps in to exploit it. So let's look at how influence is literally being bought and sold right now.
Yeah, this represents a pretty terrifying evolution in network dynamics. The sources detail a reality where literally anyone can rent hash rate for as little as $30 to $50 a day.
Wait, I want to pause here because we really need to explain how $50 of rented computing power can functionally pressure a multi-billion-dollar network. Because I think most people assume you need like an industrial warehouse full of ASIC miners to have a voice.
Yeah, you don't need the hardware anymore, you just need the capital. Through these hash rate marketplaces, a user can just rent computing power, point it at a mining pool, and construct their own custom block templates.
Okay.
And within those templates, they can manipulate the version bits.
The version bits.
Yeah, it's basically the metadata that miners use to signal support for protocol upgrades or forks. So for the price of a decent dinner, An individual can generate blocks that artificially signal support for a specific controversial change.
It's literally astroturfing the blockchain.
Yes.
And ironically, parts of the community actually celebrate this. They call it the ultimate democratization of mining. Like, hey, you don't need a megacorp. You can participate in consensus right from your laptop.
But the author violently pushes back on that narrative. This isn't decentralization, it is the financialization of protocol governance.
Wow.
You're layering market-driven signaling on top of a system that we just established has no defined philosophical boundaries. It just creates the illusion of grassroots consensus.
So you have these well-funded factions spending real money to artificially enforce new rules on a system that hasn't even agreed on its own identity yet.
Exactly. Signaling is not consent. I mean, it is coordination, it is leverage, and it is pressure. But it is not ratification. If competing visions of the network can just be funded into existence by anyone willing to rent hash rate, then the system has immense activity, it has brutal enforcement, but it has zero finality of meaning. Purchasable influence just completely replaces organic legitimacy.
The author provides a brilliant contrast here to really hammer this point home, and that's gold. Gold wins entirely by invariance.
Right.
Gold doesn't have node operators deciding which atoms are valid. It doesn't have governance debates on Twitter or activation mechanisms for a Gold 2.0 soft fork. You don't have to rent influence on a marketplace to signal what the physical properties of gold should be next week.
Gold never has to ask, what is gold? It is just defined by the rigid laws of physics and millennia of human history.
And there's this quote from the text: when one system debates its identity, the system that doesn't debate wins by default.
That's such a crucial point.
Here's where it gets really interesting, though. That quote leads into this deep dive on Ludwig von Mises and his treatise Human Action.
Right, the Austrian economic perspective.
Exactly. The fundamental argument here is that meaning and value emerge strictly through human interaction, not through mathematical decree. An algorithm can enforce a constraint, sure, but an algorithm absolutely cannot generate purpose.
You can mathematically enforce that only 21 million coins will ever exist, but you cannot mathematically enforce why anyone should care. Meaning requires a shared human understanding. And the core diagnosis of this entire critique is that Bitcoin is trying to use cryptography and code to solve a problem that can only really be solved by human philosophy.
So if market-driven signaling is corrupting a drift-heavy system and code fundamentally cannot define meaning, how do you forcibly inject meaning back into a trustless network? The author claims the only way out is a permanent written constitution. So let's dig into the Genesis Act.
Yeah, so the Genesis Act is not a pull request. It is not lines of C++ code. It is a prose-level, human-readable document.
Wow, actual words.
Real words. And the author notes it has been rigorously revised over 60 times, stress-tested against different factions and technical realities. Its singular purpose is to permanently, cleanly define what the network is, and crucially, what it categorically excludes.
And the core articles of this proposed constitution are pretty uncompromising. Like Article 1 states that the base layer exists solely for the final settlement of monetary transactions. No secondary purpose can ever override that.
Right.
And then Article 3 aggressively follows up by permanently excluding non-monetary data from the settlement layer. It explicitly outlaws using the chain as a generic data storage hard drive.
And then we get to Article 5, which is fascinating because it establishes this radical new enforcement hierarchy. It basically flips the current power structure completely upside down. It mandates that authority starts with prose, the written definition. Next are the users, who grant social legitimacy to that prose. Then nodes, which enforce that legitimacy, followed by miners, who comply with it. And at the very bottom are developers, who merely codify the established consensus.
Okay, because right now the pipeline works in reverse. Developers write the code, miners run the most profitable version, nodes blindly enforce the defaults, and users just have to deal with the fallout.
Exactly. The Genesis Act demands that the process originates with a human-readable definition that users explicitly agree upon first.
But practically speaking, how do you actually anchor a human language document into a decentralized protocol? I mean, you can't just post a PDF on a forum and expect a global network of adversarial actors to obey it. How do you technically align what is socially accepted with what is cryptographically enforced?
Well, the author details a very specific, really fascinating mechanism for this. They call it the final JPEG.
The final JPEG.
Yeah, it leverages a soft fork, but not in the traditional sense. Normally, a soft fork tightens the rules of the network. Maybe it restricts certain opcodes or changes signature validation.
Right.
But this proposed soft fork would act as a constitutional inscription.
So embedding it into the blockchain.
Yes. It requires a specific action at the consensus level. Developers would create a rule stating that from a specific block height onward, any mined block that does not contain the cryptographic hash of the Genesis Act text within its Coinbase transaction is automatically deemed invalid by the nodes.
Wow. So it forces the network to actively, permanently memorialize the pros. Like it embeds the human language directly into the mathematical heartbeat of the chain.
And the author really emphasizes that this act of inscription is not governance, it is discovery.
Interesting distinction.
Yeah, the Genesis Act doesn't force anyone at gunpoint to agree with its definition of money. What it does is make disagreement highly visible. Like if a faction wants to fork the code to allow non-monetary data storage, they are totally free to do so. But they are clearly and undeniably stepping outside the explicitly ratified purpose of the network. It establishes a stable reference point.
I have to challenge this, though.
Yeah.
Because look at the U.S. Constitution. It is written in prose, and we have had a Supreme Court arguing over the placement of commas and the definition of words for centuries.
Oh, absolutely.
The author themselves stated, you can enforce rules, you cannot enforce meaning. So prose is fluid. Words change meaning over decades. How does a digital network actually survive linguistic drift?
Well, that is the exact vulnerability highlighted in the source's logical stress test section. The framework's dependency on human language is honestly its greatest technical weakness.
Wow.
If the entire finality of the network rests on the definition of the word monetary in Article 1,
Right.
and that definition is subject to generational interpretation, then the foundation might still be fluid.
Because if we end up with developers and node runners arguing over the semantic definition of the word settlement in 50 years, aren't we just right back to governance drift?
It's a fair point. The author's counterargument is pragmatic, though. Language is imperfect, yes, but possessing a written boundary is infinitely superior to operating in a total void.
Better than nothing.
Exactly. Without the Genesis Act, every single technical debate reverts to first principles. Every update is an existential threat. With the Act, the debate is at least bounded by a stated historical purpose. It drags the conflict out of the shadows of code and forces it into the light of human language. It makes the invisible visible.
So let's zoom out here for a second. Whether you listening right now are heavily invested in cryptocurrency, or you're building a traditional tech startup, or managing a massive online community, this is an absolute masterclass in systems thinking.
It really is.
If you do not explicitly define your boundaries and your core purpose in human terms, your project will inevitably suffer from governance drift. People need to know exactly what they're committing to. If the foundation relies on assumed vibes rather than explicit prose, the system will eventually fracture under pressure.
And it highlights the absolute limits of technology. We have this hubris in Silicon Valley that if we just architect a better database or write more elegant cryptography, we can solve the messy reality of human coordination.
Yeah, we can code our way out of human nature.
Right, but this deep dive proves that technology is merely an amplifier. It only amplifies the clarity or the deep confusion of the humans operating it.
Which leads to a fascinating, entirely new problem to consider as we wrap up. The entire premise of this deep dive is that Bitcoin needs a human-readable constitution, the Genesis Act, to survive, because human users require philosophical consent.
Yes.
But what happens to this network in 20 years when the primary transactors aren't humans at all?
Oh, man. Because we're already moving toward a future where AI agents, autonomous smart contracts, and machine-to-machine microtransactions dominate network block space.
Exactly. If an AI agent is paying another AI agent for API access using the base layer, it does not care about the philosophy of Ludwig von Mises.
No, it definitely doesn't.
It doesn't care about the pros in Article 3. It only cares if the opcode executes and the transaction clears. So if we anchor the ultimate meaning of the network in a human language document, but the vast majority of the network's volume is eventually driven by non-human algorithms operating purely on the code layer.
Does the concept of meaning even matter anymore?
Right. Or does the human constitution just become a relic on a network that has completely outgrown its creators? Something for you to think about.